Hey everybody, welcome back into Mining Stock Daily. Today we got to get some market updates here from the gold and junior equities market with our good friend, the junior miner junkie himself, Mr. David Erfle. David, welcome back to the podcast. Really good to see you. You're cleaning up nicely, my friend.
Thanks, Trevor. Always great to see you and always great to talk to you.
Yeah, hey, I've been wanting to get your thoughts here on the recent, it's not just one move, it's moves in gold. Keep your head on a swivel the last couple weeks because you were flat and then you were really down and now you're kind of erased all of those losses. So let's not talk about first where we are. I want to talk about where we were. Gold went down to almost $1,800 an ounce not too long ago. Sentiment was absolutely awful, but it was so bad you could make the argument that it was time for a bounce.
Absolutely. I mean, that's the way this market works, right? We had the $1,900 6-month floor broken on the very last day of Q3. The bears were able to close the gold price below 1,900, and the last day of Q3 happened at the end of the month and the end of the quarter and the end of the week. So the following week, you had a nice stop run for the bears, and bullion banks were able to cover, and the gold price, quickly went all the way down to its rising 200-week moving average, which is around 1823. It wasn't even able to actually get there, and now we're having this strong bounce. And the bounce is even stronger because it's fueled both by macroeconomic factors and also, unfortunately, geopolitical factors because of what's going on in Israel, in the Middle East.
Well, let's talk about the fundamentals behind this bounce because gold started that rebound when the kind of escalation in Israel began and started hitting the media. We got news of that. But then last Friday, nobody wanted to be stuck short gold, not knowing what the weekend had in store. It ran it up $60 an ounce. Good move. Here we are. We are recording this on Wednesday. Gold's having another strong move, really trying to test that 1964, 1965 level futures basis once again, which is a line that I've had on my chart for a very, very long time.
Also a downtrend line, yeah.
Yeah, and so listen, like you and I have chatted, you want gold, if gold's going to move higher, you want a healthy move higher that's based on just fundamental buying and kind of maybe more macro reasons to hold it. You do not want it on geopolitical news, on news of escalations. But here we are, do we have a little bit of both here, David?
Yes, we do. Unfortunately, when you have the gold price rising on war news, geopolitical news, people are dying for your gold prices, for your gold and your gold stocks to go up, and that's not something to cheer for. When we had last week, we had a dual catalyst. We had a geopolitical catalyst and we had a macroeconomic catalyst last week when the consumer sentiment index came out much lower than expected. It keeps coming out below expectations. So lower consumer sentiment combined with rising inflation expectations screams stagflation. And unfortunately, also that ramps up the similarities to the 70s, right? When we had the same thing happen, where a war in the Middle East, ironically, I don't think it was ironic, I think it was on purpose. 50 years ago to the day, back in October of 1973, Israel was attacked, and it sparked what became known as the Yom Kippur War, and what soon followed was an Arab oil embargo. Now today we've had Iran come out and hint that they want an oil embargo and they're going to stop selling oil to Israel. So, all these things are lining up to where it's a lot like the 70s, and in the 70s we had a huge move in the gold price that started from about $100 in 1975, a few years after that war started, and it went to $800 by January of 1980 on the Iranian hostage crisis, coupled with Russia rolling into Afghanistan. So, and also you had rising interest rates and stagflation, and a lot of these similarities are taking place right now. So, this is very bullish for the gold price, but unfortunately, on a day like today, when you have a gold price that's up another $30, silver and the miners are lagging that move. And you don't want to see that, and they're lagging that move because the stock market is beginning to roll over, and you don't want to see panic in the stock market if you're holding gold shares, because if you see panic in the stock market, that's gonna initially hit your gold shares, even though they're completely depressed and washed out. That you could still see a bit more selling in them.
Oh, and a lot of this is happening just watching the bond yields move higher and higher on every end of the curve here, David. I mean,
absolutely. Today we had a $13 billion sale of 20-year bonds this afternoon, and it came in stronger than expected, and that's why you saw a move higher in the stock market, and come off its lows, and the sale was seen as like a test of demand for long dated government debt. So, but gold prices have really been extremely resilient in the face of these rising bond yields. I mean, the 10-year was, last time the 10-year was just over 4%. The gold price was at 1820. Now it hit 4.9% just before that auction this afternoon, and gold's at 1960. And so, and you've got, and it's also rising with the U.S. dollar. And when it rises with the U.S. dollar, silver and the miners can tend to lag.
Well, and I know it's just one auction, and then it's just it's a 20-year auction. Obviously, I haven't seen the commentators that I follow in out of the bond market provide any commentary yet, but I'm sure to be watching it. But that seems pretty good. It seems like there is this idea of a flight to safety where both gold and bonds can kind of fill that need, right? And we are actually seeing a little bit of, at least today, the stock market, the equities market is fragile. Are we? I mean, this. I don't necessarily think it's going to be a one-day flip, but are we starting to really see a gradual turnaround of risk off happening within the investing community here?
Well, I think so. I mean, going back to the similarities of the 70s, I mean, the markets actually topped on October 29th, 1973, after the Yom Kippur War started. And then by December, the Dow had fallen 21%, and then a severe recession also followed, and gold prices doubled over the next several months. So this week, you're seeing oil prices moving closer to $100 a barrel on fears of a widening war that might bring in Iran. So it's really interesting how this is shaping out in the Middle East, because Palestine basically does not have a military, and while the terrorist group Hamas doesn't even have an air force or any kind of naval power whatsoever. And to contrast this, Israel has one of the most advanced defense forces in the world, and most importantly, they've got nuclear weapons. But and also Israel, they've got over 2,000 main battle tanks and 615 heavy infantry fighting vehicles, and Hamas has 0. And every adult in Israel has received proper basic military training. Yet the U.S. is in the process of sending an amphibious task force of thousands of U.S. sailors and Marines toward Israel right now, where they will be positioned aboard warships in case a conflict there with Hamas expands. I mean, why? Unfortunately, that I think this is basically my greatest fear here is that the players are entering the arena over there in the Middle East for something much larger than Israel versus Palestine, and that will be reflected in the gold price going higher before it takes place, most likely.
And on the other side of, well, it's not even close to that region of the world, we have Vladimir Putin visiting China. Which
exactly.
Holy smokes.
You've got the U.S. Funding Ukraine with an open checkbook, And at the same, and now they're discussing $100 billion package that would be combined with Israel relief, Ukraine relief, and border wall relief. It's just insane what's going
Yeah.
on here with the debt. I mean, the deficits and basically with what's going on with the debt situation. I mean, that is just a black swan waiting to happen.
Yeah. Oh, and we're in an election year.
Exactly. And going into an election where the leading Republican candidate is going to be probably going to be tied up in court to the election, where they're trying to put him in jail, and then the leading Democrat candidate is the Republicans who can't even figure out who their speaker is going to be, want to try to impeach him. It's just a mess.
It is absolutely a mess. You and I fully, heartily agree on that. I mean, why not? Why wouldn't you be buying gold in this situation?
Exactly.
I mean, I guess, podcast over. That's our answer. Well, okay, David. I mean, listen. Obviously, there's turmoil everywhere. In fact, I don't know why the mainstream media just doesn't put up turmoil everywhere graphic on their screens every single day right now.
Yeah, well, Wall Street won't let them.
Wall Street won't let. But listen, there's also let's talk about our favorite Canadian equities, the Explorers. There's turmoil in the Canadian markets right now. Volumes are absolutely depressed.
It's a depression, basically, yes.
The TSX Venture, the composite. I mean, I shared that chart over and over. It looks so bad and so ugly. What's going to take? I mean, we could see gold really move higher here, and I can actually envision $2,500 gold next year. I can see that with the news
by April, easy, yeah.
With the news in front of my face, I could see a screaming gold price. I don't know if that actually brings the small cap junior gold explorers up with it.
Oh, it depends on what's happening in the marketplace, right? I mean, if you're seeing panic everywhere in the stock market, which is priced to perfection, right?
Yeah.
And it's just a bubble that's been waiting to pop for a very long time. But when shorts realize that it's not popping, they have to cover, and it keeps going higher. And you got 7 AI stocks basically holding up the entire S&P 500 because the other 493 don't look so hot. So it's really interesting the way this is panned out for the juniors, because basically we had a major bottom in the gold stocks, in the gold miners, at this time last year. It was a 7-year gold cycle low. I wrote a story about it. I said, look, gold stocks bottom every 7 years, and I was correct, but I was not correct about the juniors bottoming with them. Because most of these juniors continue to go lower. Some of them are even at their 2016 lows and even below that. So when you've got a gold price that has just been going sideways while the stock market has been going higher, and people are getting 5% on their money in a savings account, why should I mess around with risky gold juniors? And the street knows this. As far as juniors are concerned that are exploring and they come out with great results, and if you're a junior and you're drilling and you've got some cash, but you've got less than a year's cash, even if you come out with bonanza grade results, that pop is going to get sold. It's going to get sold by the street because they know that you're going to have to finance pretty soon, and drill results aren't rewarded in the long term in this market with capital markets being so stingy right now. I mean, it's basically, Trevor, it's all resource investors have been trading amongst themselves for the past 11, 12 years. Mm-hmm. And there's no generalist investor slack to pick up anything. So you've got savvy speculators, you've got a savvy street that's playing with these stocks that know they're going to have to finance. So it's a very, very challenging market. And if you're going to play in it, you have to make sure you're holding the right stocks for the long term. Because let's face it, we know that 85% of these juniors, are basically lifestyle companies. And we don't know if once the capital markets open again wide, that window opens wide again, are these lifestyle companies going to get financed again like they always do when there's a major bottom in gold stocks?
Have you been somewhat surprised about, I mean, I don't know if resiliency is the right word here, but we're not seeing a lot of those quote unquote lifestyle companies just go away.
No, and they need to. I know we've discussed this before, and
Yeah.
I really believe that a lot of these companies need to merge. With companies that have projects in their area or that have similar projects. I'd like to see a developer with 3, 4, 5 really good high margin projects with 100, 200 million in the bank. I'd like to see a merger of several juniors, create a company like that, and then get a big board U.S. listing, have lots of liquidity, have lots of interest on the street, and that would certainly help, because a lot of these companies now that have done a great job in de-risking these multi-million projects. They raised money at the right time when their share prices were high. They even raised money earlier this year when I know a lot of investors were upset about that, but it turned out to be a really smart move. Their share structures are still pretty tight, considering they're at the finance stage, or they're at the feasibility stage, and yet their market cap is maybe 2-3 times less than the initial capex equity portion they're going to have to raise to get the mine built. Mm-hmm. So that is not a good thing, and I don't think it's going to change until the market starts to price in a $2,000 floor as opposed to a now 13-year ceiling, and B, the generalist investor starts to come into not only the gold space but starts to get into the junior space. So these are things that need to happen.
Yeah. You mentioned something very interesting there about merging and getting a United States big board listing. You and I are both based in the U.S., and we were chatting a little bit before we started recording just about the difficulties it is of speculating and investing in the exploration sector when the majority of them are traded in Canada. Mm-hmm. I don't. Maybe it's just my own personal bear market frenzy and frustration right now, but it is getting very challenging. You would think that for as much liquidity as there continues to be in the United States, the Canadians would want some of that and make it a little bit easier, but it's just only getting more difficult, David.
Absolutely.
Do you see
making it harder and harder, adding more fees? Yes.
So, I mean, could that be an incentive for more M&A with what you say? It's like, listen, you want liquidity, you want flow, it's not here. Obviously, Canada has its own challenges. I mean, both countries have their own challenges right now, mm-hmm. fundamentally, and on the economic side. But could that be an incentive to say, let's merge, let's get that U.S. listing, and let's really pound the pavement here in the United States, because right now it's just not working.
Right. There's one company that is starting to do that. It's one of my top 10 picks, and I hold the stock. It's a Cisco Development. This is arguably one of the most serially successful mine builders in the sector. They have a U.S. listing. They have 3 projects that they're de-risking right now, and one is at the finance stage, and one they're already producing at, and another one I believe they might be trying to sell in Mexico. But they have multiple projects, and they have a U.S. listing. They have access to capital. They have a tight share structure now after they purchased the Tintic mine complex in Idaho. They had their eye on it for a very long time, and this is a very high-grade mine, and there's lots of potential and prospectivity on the property. So a company like this, and adding, maybe another project that is close to the finance stage or at the feasibility stage. I'd like to have them a bit more capital. The market knows they have to raise capital now, so the market punished the stock, even though the stock had already moved down quite a bit after the market thought they overpaid for Tintic. And I got into the stock after that huge move down, and unfortunately it had another move down when the company announced that they're going to have to raise more capital to start construction on the Barkerville the Caribou project in BC, which now they just got the environmental permit, so it's basically permitted now. That's another thing is the permit issues that these companies have to go through. Some of these mines that these companies are going to have to finance down the road still need to get mining permits, and they're still a year or 2 years away from that. So, there's two types of mining projects. There's the permitted mining projects, and there's the mining projects that still need to be permitted. So, a lot of things have to change in this sector. A lot of these companies need to go away. And just basically, bottom line, generalists have to come back in the sector. And for them to come back into the sector, gold's going to have to break out.
Yep. All right. David, I appreciate your time. Good to connect with you once again. Have yourself a great rest of your week, and hopefully we touch base here sooner rather than later.
Thanks, Trevor. You too.